Joining us right now is EY National Tax Department leader Michael Mundaca. Great to see you, Michael. Thanks so much for joining us.
Thanks for having me.
So what do you think about that? I mean, we know that the top 10% of earners pay 71% of income tax. Do you think that the tax code right now is fair? Should it be different?
Well, you had a story about the debt. There is an issue right now in deficits in the United States. There are two ways to attack it, spending side or the tax side. So we see a lot of discussions around taxes. Who should pay? What's the fair share? There's a big difference between how Republicans and Democrats are approaching this. We see the presidential candidates laying out plans for taxing income at higher rates, for taxing wealth, and increasing taxes on corporations. This is going to be a big issue over the next year.
What about corporations? Do they change their behavior as a result of lower taxes? So the corporate rate came down from 35% to 21%. Have you seen, as a result of that, businesses putting more money to work, hiring more workers?
Yes, absolutely. They have more money on hand. They have more money to invest. And the tax changes not just the rate. The international rules changed as well. That changes some of the dynamic for where to invest. Also, there are changes temporary about investing in capital assets, 100% expensing. That drove investment as well.
So, Michael, again, you know, EY is probably in the majority of the Fortune 500 where you guys provide service, and you're here in C-suites. Just to build off Maria's question, we were talking earlier, how are the CEOs of these large corporations, what's their confidence level in the current tax structure, number one, and number two, the uncertainty that's created with the small business person because the rules and regulations haven't been brought forth yet?
Those are great questions, and I'd say this uncertainty extends to both small business and large businesses. The tax rules that came in over a year ago now, very complex. We're waiting for final regulations from the Internal Revenue Service. You can do a lot with the current rules, but you need to know, in order to make big decisions, what the final rules are going to be. And Bob, your point on small business, there's this 20% deduction for flow-through entities. We're getting rules around that now, but those are complex as well, still need to be worked out in full, and that's creating uncertainty. That's holding back a bit, I'd say.
Yeah, for example, lawyers do not qualify for that pass-through, so there really is some indecision out there as far as what tax you should file and the potential penalty for taking the wrong path.
That's absolutely right.
Yeah.
So we were talking, I mean, we just mentioned Kevin Brady. We're talking about him. He was previewing what would be basically a simplification of the tax code that we never really saw materialize. How much interest do you think there is in that, and what kind of effect would we see that have going forward?
There was some simplification. What was done in the bill with respect to increasing the standard deduction did take a lot of people from having to itemize to getting an advantageous result by using the standard deduction now. But you're right, there was not a thoroughgoing simplification, and certainly not on the corporate side. Again, people do want simplicity, but they also do want the benefits that the new rules give them. So it's always a balance between the two.
And Congressman Kevin Brady joined me yesterday. We talked about how some states want to repeal the cap on federal deductions for the state and local taxes. SALT. Watch this.
New York State is a fantastic state. So are other high-tax states like California. But they brutally tax their families and their local businesses. Even though their economy is booming because of those tax cuts, the fact of the matter is they tax their families so high, people are leaving. And so repealing the SALT deduction does two things. One, it rewards mainly wealthy homeowners and earners in those states. And secondly, it encourages Governor Cuomo to raise taxes even higher. Exactly the opposite of what most families and businesses in New York want to see.
Yeah, and of course, New York State Governor Andrew Cuomo talked with President Trump yesterday about this at the White House. The governor argued that higher taxes drive away people and businesses and hurt what he calls the economic engines of the country in California and New York. So you must be dealing with this a lot right now, Michael. Is this cap on SALT causing companies to leave the high tax states?
I'd say people are thinking about what the impact of this is going to be. They want to see how this plays out. They want to see the interactions with the other rules. But as we've discussed, taxes are front and center right now on a lot of people's minds, both individuals and companies, and it's affecting a lot of decisions.
I feel like after April 15th, we're going to see an impact because people are going to get some sticker shock. Even though you know that your SALT deduction has gone away and you know you're probably going to pay higher taxes, once you actually get the numbers, it could impact the economy. What do you think?
That's right. A lot of people use the withholding as a sort of forced saving and expect to get a refund. We've seen stories about how those refunds have gone down, at least so far, from what the IRS has released as information. I think that may continue, and it certainly will be an issue with respect to the higher tax states.
I don't know how the Democrats can run on a wealth tax, which Elizabeth Warren's idea, which is unconstitutional, but I don't know how you can run on that when you're seeing the devastation of these high spendings in these high spending states that are blue. I mean, Connecticut, we looked at Connecticut. Connecticut was already in a downward spiral because of the increase in taxes on businesses. That housing market in parts of Connecticut has never really recovered from the 2008 financial crisis.
And no wonder big companies have left Connecticut.
Yeah, and all these issues we've been talking about, the debts, the deficit, new taxes, proposals to increase taxes, they're going to play out over the next year or so, especially in the run-up to the presidential election. Everyone's got their tax take on this. Everyone has their spending priorities. All this has to be squared.
Cuomo is literally saying, wait, we need the rich to help fund our budgets. Is anybody in his party listening to him?
Mm-hmm. Yeah, you're right. Michael, great to get your insights. Thanks so much. Michael Mundaca joining us.